Welcome to Profit Insights, your trusted companion for navigating the ever-changing financial landscape. I'm Dusty, your guide through the latest developments in global markets, corporate news, and investment insights. Sit back, relax, and let's explore what's shaping the world of finance. Let's start with the buzz from the past couple of days. We've seen some exciting movements in the global markets, notably from the U.S.-China trade talks. Treasury Secretary Scott Bessent has announced encouraging progress, including a pause on new measures and significant tariff reductions. This news has breathed fresh life into the markets, propelling Wall Street futures upward. Both the S&P 500 and NASDAQ have shown impressive gains of 1.4% and 1.9% respectively. European and Asian markets are also riding this wave of optimism, suggesting a climate of renewed investor confidence. Across the Atlantic, the European Central Bank's outlook is grabbing attention. Bond yields in the Eurozone have risen as there's been a shift in sentiment around potential interest rate cuts. ECB board member Isabel Schnabel has voiced caution, highlighting potential risks of overshooting the 2% inflation target. This has led investors to reconsider their bets on future rate cuts. Turning to the U.S. stock market, May 12th brought good news. The Dow Jones, S&P 500, and NASDAQ all closed on a high, with consumer discretionary stocks leading the charge. It seems that all 11 major sectors in the S&P 500 ended the day in the green, a promising signal for investors looking for robust growth opportunities. In Europe, the stock performance ended slightly higher, although the backdrop is complex. The gap between UK borrowing costs and Germany's has hit a 34-year high, prompting investors to speculate on the future actions of central banks in both countries. Over in Asia-Pacific, markets opened mostly higher, breaking away from Wall Street's previous declines. Investors are keeping a keen eye on China's upcoming policy meetings, which could set the tone for future economic growth in the region. On the corporate front, a couple of stories stand out. President Biden has blocked the $14.9 billion sale of U.S. steel to Japan's Nippon Steel, citing national security concerns, a decision that sent U.S. steel shares tumbling. On a more forward-looking note, Microsoft has announced a massive $80 billion investment in AI-enabled data centers, underscoring their commitment to advancing artificial intelligence infrastructure. And don't overlook the economic indicators. Chinese industrial profits have shown signs of narrowing their decline, dropping by 6.5% year-on-year in May compared to April's 8.5% decrease. This points to a potential stabilization in China's industrial sector, a critical area of focus for global trade. Now, for those tracking specific market data, as of May 12, the SPDR S&P 500 ETF is slightly down, while its Dow counterpart sees a mild rise. Tech-focused ETFs and commodities like oil are experiencing upward trends, and the cryptocurrency market is providing its usual dose of surprises, with Ethereum up by 1.65%. For our investment tip today, consider the broader implications of U.S.-China trade relations. With significant policy shifts potentially on the horizon, sectors closely tied to trade and technology might present unique opportunities. Also, keep an eye on tech investments, especially with Microsoft's bold venture into AI. These spaces are ripe with potential for those willing to navigate their intricacies. That's it for today's journey through the financial world. Thanks for joining me on Profit Insights. Remember, when the dust settles, only the truth remains. Until next time, keep your investments grounded and your curiosity keen.